Hello,
Hey, Katie.
how are you?
Good. How you doing?
Good. Just trying to make sure all my screens are available to share. Guess I can.
Yeah, you could. Why don't you try sharing it? We could see.
Yeah, I think it's okay. Let's see. Let's see. It's on.
There you go. I see it.
Sweet. Okay.
There you
It's
go.
weird on, I guess I'm not used to WebEx anymore. Hi, Michael.
Hi, everybody.
Hi, Michael. How you doing?
Good. How are you guys?
All right.
Good.
Getting ready for another proposal?
Yeah, there's one due June 1st that I'd really like to sort of squeeze into the month of May.
Okay.
Yeah, we'll see how it goes.
Is this on your own, or is this another sub award? Or
This is going to be on my own, so I'm really looking to figure out how to do budgets. So this seems like the perfect time.
okay, who's it to? Who's the funder?
There's a proposal that my friend sent me. She said, "Oh, you would be perfect for this." It's through the NSF, and it's
Okay.
meant for early academics, and it specifically has these different criteria. And we as an institution, and I hit quite a few of them. So
Okay.
hopefully, we'll see how it goes.
Oh, good. Yeah. When you
Cool.
have a chance to send me the link to that, so I can just start looking at it and what
Okay.
they're going to require. Um,
Hi,
so,
Denise.
Hi. Hi, Steve. Hi,
hi,
everybody.
Denise. Good to see you.
Thanks. Nice to see all of you.
What do we got here? It's 11:59. So I was going to say, I haven't yet put last week's recording up. I just got the PowerPoint slides posted yesterday, and I will be getting the recordings up on YouTube. But I did a little trimming of the beginning of it yesterday, and it takes a while for that process and then post itself. So I will get that, and then we'll do this one. This one is recording already, so uh,
Yeah, you might want to. Can you trim off the first 5 minutes while I was just sitting here?
I, I usually do that, and then
Okay, good.
you have to be careful if we start talking about the administration or anything. And even though we are the administration. Oh well. So let's see. So yeah, this is going to be the last one of the year, and the last funding Friday of the year. I'm going to try to do a couple in the summer. I might just think about or get some feedback from folks on what they would like to hear about, and maybe have some working sessions. Because my goal this spring was just to have a few sessions to get things started. Guess we could give it another minute here to wait until see who shows up. There's a few more people that registered,
Yeah,
but
my presentation's about 30 minutes. That will leave us the other half to chat on, if you guys have specific questions or things like that, we can talk about that as well.
yeah, yeah. So we might as well just get started anyway. So Katie's going to talk about budgets today. So why don't you go
Isn't this
ahead?
exciting for a Friday? Woohoo. Okay. All right. I'll share my PowerPoint, which I can share with you as well afterwards. But for now, I will share it on the screen. All right. So if you guys attended that other one that I did, it's similar, but this one definitely goes into more detail, and I have a little bit more like solid examples for you guys to follow. So I think I've met you guys both, but in case you forgot, I'm Katie Millsom. I'm the Associate Controller and Grant Administrator in the Office of Business and Finance. And today we are going to talk about creating a budget for a grant proposal. So I think this might describe how most of us might feel when we start talking about budgets is help, or yeah, maybe you don't even want to think about it, but I'm going to go through it and just kind of break it out, give you guys like the slides should be really good notes for you to follow when you do go about doing a budget, but also to know that if that's not your thing, I am here, Steve's here, and we're happy to help you. And this is kind of like how I do it when I do it myself. So I think, you know, you can either try to give it a stab on your own, or you can just come to me and Stephen will walk you guys through it. But this is kind of an overview of that process. All right, so in a budget, obviously there's different types of budget categories. The ones listed here are pretty standard categories that you'll see on most budgets, but just to keep in mind, each grant that you do apply for, it will have its own set of budget requirements. So make sure when you're going through early on, make sure to find that in the RFP description, the budget categories, and we want to make sure that we're using those categories that are listed on the grant. So if we need to change the name of salaries and wages to employees, or, you know, they may change it up a little. So we want to just be consistent with what they're looking for. So basically these are pretty standard though. So salaries and wages are going to be any employees that you pay on your grant. And then benefits are related to those employees. Those are additional costs to the university that sometimes we may forget about because they're not just the salary, they're extras that we kind of have to add on to make sure we're incorporating the full cost of what it does cost to pay an employee. And then the other ones, consultant fees, those are your independent personnel or whatever you want to call them, but they're independent of the university. And then you have like travel, supplies, materials, services, and indirects. And I am going to go into all these in more detail. So we'll move on here. Okay, so salaries and wages. This is usually the biggest part of our grants here at the university. So I'm going to go into a little more detail here on how we calculate these. So the main two ways that we can kind of compensate an employee or the university for an employee on a grant is either through course releases or through like a summer salary or some kind of a stipend. So the first one is your course release. So you guys are probably familiar with what this is, but basically this is where the grant's funding a part of your salary that we're already paying you anyway, but it's going to basically fund us that piece of the time that you're spending on like one course, and then you'll now have that time to work on the grant. So in this situation for a course release, really you're getting the same pay, the university's paying you as usual. It's just that the grant's funding that like portion of your salary, and then we can then use that portion of the funding that we received to hire an adjunct to replace you for that course. So that's kind of how it works in concept. As far as if you can do a course release, we do ask that you talk to your dean first before just trying to do a course release, because they need to approve it. Like maybe you have other commitments or things and they don't think it's a good idea. So that's something you definitely want to clear with them before you get too far into the process. As far as how we calculate a course release, usually on grants, we calculate salaries. We say the term like effort. That's like how much % of your time are you contributing to the grant work. So the different schools have different methodologies, and these are based on how we've kind of historically been doing them. I know they could be up for debate, but this is kind of based on going through contracts and stuff, how we've interpreted it thus far. So for College of Arts and Sciences, a full course load is 6 courses in a year. So we take 1/6 of the salary, which is 16.67%, and that's how we equate one course release for a CAS faculty member. School of Business is the same. And then School of Ed, they recently kind of readjusted how they evaluate it, which I wouldn't be surprised if this follows someday for School of Business or CAS, but as for now, it's how we have it here. But School of Ed, their course load is 8 courses. So we take 1/8, but then they say specifically in their contract that 60% of their load, their teaching load is or 60% of their full contract is for teaching. And then the other 40% is for other things like research or community work or service or whatever they define it as. So the way we would calculate a course release for School of Ed would be 1/8 times 60%, which comes out to 7.5% per course release. All right, so those are basically the numbers that you can use if you're building a grant. And if you're expecting to have 1 course release or 2 course releases, those are numbers you can definitely start with. The other way you can get funded is for like what we call summer salary. So let's just say you're going to work on the grant above and beyond your regular contracted hours. So if you're a CAS faculty, you would normally have a 9-month contract. So then that means that you would have 3 months of summer that you could work on the grant. And so during that time, you could get paid for your work. So this is really Yeah, it has to be above and beyond. Same with like a stipend. That could be maybe during your contracted hours, but we have to be careful that we're demonstrating that it really is above and beyond your work, because obviously the grantor doesn't want to fund anyone more than 100% or double dip, you know, like you're getting paid twice. And then I guess one of the main distinctions between these two types, a course release, like I said, is just, you know, it's compensating the university for your time and then we pay an adjunct with that money and then you get the time off. Summer salary is actually like extra money in your pocket because you're getting paid additional during your summer months that you're not under contract. Let me make sure that wrong click. Sorry, I'm like, is this going to advance or is it going to, I clicked once. I don't want it to advance like 5 slides. Okay, there we go. All right, so now I did a sample calculation of what we just talked about. So let's just say we have a CAS faculty that's making $80,000 a year and they're on a 9-month contract. So in our grant scenario, we are going to say that they want to get 1 course release and then they want 1 per year over a 3-year grant period. So how we would calculate that, you'll take your salary. And so this can be useful for you. You can kind of plug in your salary and figure it out as you start to look at your grant projects. But in this case, the $80,000 times the effort. So this 16.67, that was our, on the prior page, the course, 1 course release for a CAS faculty. And then that gives us this 13,336. Well, we can't forget benefits because obviously the university has additional costs on top of the salary that it really costs to pay an employee. So for a faculty, we use the 26% rate. And then that would be this amount here, bringing us to a total year 1 cost of $16,803. So, you know, that's kind of what you got to do to figure out approximately how much a course release truly will cost you for your grant. Now for year 2, we would basically start with this same first number, but then we want to multiply it by an inflation factor. I know right now, like inflation's not that high, but this is just our standard rate we use for budgeting purposes. We use 3%. I think right now, if we were doing a grant, we may choose to do a lower rate, but just for a standard factor, this is what you can use. So it's basically just taking that amount from the year before, multiplying by 3%, and then adding your benefits. And then you can see just each year it goes up a little bit, accounting for inflation. Now, something else that's really important to keep in mind is that if you're up for a promotion and you know, like you're likely to get it and it's in the next year or 2 and your grant's going to be like a 3 or 5 year grant, you'll want to let us know because we'll want to make sure that we assume you're going to get the promotion and budget accordingly in your grant, because that could make a significant difference if your salary bumps up a bit between years. So we do look out for that as well. And sometimes even if you're not sure, I can always check with budget too to ask like, hey, are any of these faculty members up for promotion? So we do consider that as well. All right, so our other example is going to be a summer salary calculation. So let's say our CAS faculty member is on a 9-month contract. So they have 3 months that are eligible for summer salary. So let's say our salary was $80,000. We'll take the total salary divided by the months under contract to get their monthly salary. And I know it's a little confusing because sometimes you may say, well, I'm paid over 12 months. Well, that doesn't matter here. That's how your cash flow works. But as far as what you earn each month, it's based on your total salary divided by the months in your contract. All right, so that's how you can figure that out. And then from there, you can kind of determine based on your grant budget or how much effort you think you'll need. I have a couple examples. You can say, okay, I'm going to work 100% for 1 summer month. So you take your, you know, the monthly rate we just calculated and then add in your benefits, and that would be your cost for that. Or you could say something like, I want to work 50% effort for the 3 summer months. So then you can take your monthly rate times 50% times the 3 months, get that amount, and then multiply that by your benefits rate. The good thing here is it does give you a lot of flexibility. So if you're trying to reach a total contract amount on your grant, you know, you can kind of play with these numbers and get where you feel is right. You know, like whether you need to add, you have more time you can give, or, you know, like you have more budget where you can say, okay, yeah, I do need to work more, or you can say, oh, I'm tight on the budget, I'm going to lower these percentages. So really you could just play with the effort amounts and or how many months you want to work. All right, and then just to clarify, I think sometimes payroll is super confusing. Just remember, these are estimated costs that are charged to the grant. They are estimated. but they are charged to the grant, not necessarily your take-home pay. So obviously, like, we're adding benefits, which are other costs of the university, but those aren't in your pocket amounts. The amount you would take home would be more like this, you like, say an example two here, the 50%, the 13,334, that minus all your deductions. So I just don't want anyone to think like what, you know, we're posting in the grant is what your take home pay is if you elect the summer salary. So that's how that works. All right, another type of worker that could go into our salaries and wages category is the student workers. So I'm sure you guys have had student workers in the past. Basically, they're pretty easy to calculate in a budget. Really, you just need to know how many hours per week are you going to have them working on your project and how many weeks in the grant period will they be working. As far as undergraduate student workers, they're pretty much based on minimum wage. So right now, minimum wage is at $14 an hour. And then next year, it's going up to $15 an hour. So you can use, for budgeting purposes, you can go ahead and use those rates and then just multiply it by, you know, how many hours per week and how many weeks, and that'll give you that cost. Graduate student workers have recently been at $15 an hour. I did ask HR about this since, you know, like now the undergrad and the grad are at the same rate. So I did ask about that, and they are having discussions on that just to make sure it's equitable, because, you know, it's the same right now. So that may be updated in the near future, but for now they said that's a solid rate to rely on for your budget. And then just like the employees had their benefits rate, we also do need to apply a 10% benefit rate to your student. So once you do your calculation, just add 10% for that. Okay, and then here I have a slide showing you the kind of a summary of all the benefits. Now the benefits, what they are, I've had questions on this before. First of all, what they are, it's the additional employer expense, you know, for having an employee. So it's going to include things like the employer taxes, like FICA, workers' comp, those fun things, medical, any medical elections that employees have made, retirement, which I know that's on hold right now, but that's in our standard percent calculations here. And then they're calculated by like class of employees. So like you have a full-time faculty, part-time faculty, administrative staff, and non-exempt admin and students. So you can see the different percentages by category. They're based on an average. So, you know, somebody may be higher or lower. Like if someone doesn't have any medical, their rate's going to be lower. If someone's getting medical and they have like a tuition remission benefit, theirs may be way higher. So this is really just an average that the budget team calculates each year. I know they have special rates for this year because of all the retirement freezing and stuff. So, you know, we can look into that, but I'm just providing you for now, like our normal rates, because the other one's just kind of a one-off and we're in a weird situation right now. So I want to give you normal information for normal times. And then, you know, each grant, if we have concerns on the rates, we can always modify based on our current environment. All right, so personnel. So thus far we've talked about employees. And again, those are people that are already employed by the university. It could also be other people that you hire specifically for the grant. You'd want it to be anyone where, you know, we're controlling their work schedule, we're providing them a computer, we're having them report for hours. Those kind of people on the grant would be considered an employee, and they are subject to payroll taxes, and then we'd have to build the benefits into the budget as well, as we discussed. However, you may have another consultant on the project where they truly are independent. Like, you know, they dictate their own hours and work schedule. They probably have their own, you know, equipment that they use. They kind of run their own show, and they're just doing a specific task that, you know, they've been hired for. And those people won't be treated they won't be treated in your salaries and wages category. They'll be treated in like a consultant's category. And basically the main difference there is instead of being paid through payroll, they'll be paid through accounts payable. So if you've ever submitted a check request, you would need a check request and like a little memorandum of understanding or little kind of employee agreement, and then get their W-9 as well. So that's kind of how that would work. And then we don't take out taxes on them. We don't do any of that. And they'll get taxed. They'll get a 1099 that they can report on their own personal income tax at the end of the year. So that kind of relieves us and our grant budget of having to deal with any benefit rates or taxes or anything. I think the only thing that may come up, and it's right now it probably won't happen, but if you ever have a consultant physically enter the state of California from out of state, we may have to withhold some state withholding for them. Or if they're international, there's some federal withholding. So that's the only thing I know right now. If they're from North or any state, New York, wherever, if they're working virtually, it won't matter. It's like they have to physically enter the state for that to be applicable, but just that could happen. So just keep that in mind. And then with consultants, I would advise you just to make sure that when you're giving them a rate, we need a realistic estimate of hours and, you know, a rate. We don't want to just be like, here, $1,000. Like, okay, well, how much effort are they putting in and what is their true rate? So you really want to kind of be mindful of that when you're calculating a consultant, because you won't have to worry about the benefits, but you do want to make sure that you have a realistic rate for them. Okay, so now we have subawards, and this is kind of like when you're working with another institution. So I see it a lot where, you know, you have colleagues and other people that you work with at other institutions, and you guys want to team up and do a grant together. So that's great. Now, one of us is going to be a subrecipient and one of us will be a prime recipient. So either way, it's kind of the same process, but let's just say you're working on a grant and we decide Redlands is going to be the prime recipient and maybe your co-PI is from another institution. So we're going to submit the grant kind of like normal, but then your co-PI will kind of have their own budget. They're going to get paid from their institution. They're going to maybe have their own travel expenses or supplies or whatnot. So they'll need to put together a budget and then they'll submit that to us. And then that will become like one line on our budget instead of like, we wouldn't put them in our salaries and wages category because we're not paying them as an employee. We would put them more like, well, it depends on the categories, but it may go in like a consultants or a sub-recipients category. And we would put their total budget on like one line. And then, you know, through the process, they would like invoice us and then we would pay them kind of like they're a vendor, but it's like they're kind of a sub-recipient. So basically when they do that, we will want a budget from them detailing their expenses. Also like a budget narrative from them, just we'll get into that in a bit. But just make sure we're getting that from them. And then often a letter of support is required just to make sure that their, you know, their administration and their institution is aware of what they're committing to. That way, you know, they don't say all this stuff and then we get the grant and now they leave us hanging. Like we do want some sort of letter of commitment or support from their either dean or admin or whoever needs to sign that letter. And then typically we'll coordinate with their grant office as well. For us, you know, just making sure we get what we need from them. And then if it's on the flip side where we're the subrecipient to them and they're the one applying for the grant, we will want to make sure that we're giving them everything they need. And this is kind of a short list. Other like bigger institutions may have a more robust checklist of things they're going to ask for. So, you know, that would be stuff we need to give to them. So we would coordinate with them and provide them anything that they need. Okay, so travel. So I know travel's been limited lately, but hopefully again, someday soon we'll get to go back to those conferences or commute to project sites. So if you have any of that in a grant you're planning, I would say commuting, if you're gonna, let's say you're gonna travel to 5 project sites during your grant, the best way to calculate that, you'll just take whatever the current year's IRS mileage rate is. So right now it's 56 cents a mile. You'll just kind of calculate, okay, how many people are driving, how many miles are they driving, and then just take that rate and that'll give you a good budget for what you need for that kind of commuting travel. The other type of travel would be, you know, if you're flying to a conference or flying to a meeting that you need to attend as part of your grant, you'll use, well, there's this per diem rates that you can see. I found this site, gsa.gov, and it's super helpful in giving you realistic rates for where you're traveling. So if you go on that site, I put the link on my slides here, you can see, you can type in where you're going because, you know, costs are very different by area. So here I put in that we're going to San Francisco and it gives you like an average lodging expense by month. So that's super helpful because it helps you kind of give a good estimate without having to go on like 100 different hotel sites to find out what a good rate is. And so you can either just figure out, you know, what time of year you'll be traveling, or if you have no clue, then just maybe average the rates they have by month to get your own little average. But that gives you kind of a per night hotel cost. And it also provides a great breakdown for meals and incidentals. So it gives you either your daily amount, or if it gives you a lesser amount for first and last day of travel, because maybe on your first day you ate breakfast and lunch at home, but then your last day you came home for dinner. So it kind of breaks it down. Or if you want, it gives you kind of the average cost per meal and incidentals. You know, maybe you're at a conference and they give you breakfast and lunch. So, you know, okay, I'm only gonna have to buy dinner. So now you can say, okay, this is how much a dinner should be on average. So I think these are really great rates to use. The only other costs that you might want to include are like, well, obviously your airfare, which you can probably just do a little search on Southwest or whatever airline you prefer to travel on and just kind of look and see what it appears to be an average rate for that flight that you would reasonably take. And then, you know, maybe if you need some ground transportation or something, you'll kind of have to figure that out a little bit. But so that's a super helpful resource that you can use when you're calculating that. All right, any other costs? I think, you know, it's going to depend on what it is, but I would just caution you, do some research. I know we're tempted to, on those budgets, just throw random amounts like $250, $1,000, you know, just kind of throw out some round numbers there. But like, let's just say you want to buy a computer for your grant and you're just going to say, oh, $1,000. Okay, well, what computer are you buying? Did you include sales tax? Did you include shipping? Did you include, maybe you need a year of Apple Care to go with your new device? So I think those are all costs that are part of that, you know, thing that you're purchasing. So you just want to make sure you're really being realistic, because if, you know, you put a bare minimum amount on your budget and then you go to actually purchase it and then all the costs start to add up and you're like, oh no, I don't quite, it's going over. So just either round up or just kind of pre-consider all those other additional costs.
One thing I was going to point out too, from university perspective, is you'd be buying it through ITS most likely, so they will actually come through and give you a cost estimate if you have time before your proposal.
Yes.
Sorry
perfect.
about that.
Yeah, no, we can work with you to get a cost proposal on those items. Like if you know what kind of device you're looking for, we can get that and they'll give it to you at the rate we'd actually get it at. So thank you, Steve. That was a good point. And then for services, if you're working like for a statistical data firm or anything like that, if you know where you're going to go, like get a quote from them, you know, put their name into the budget. We don't, you know, it's better, as specific as you can be, I think is good. And it shows that you've done your research and that, you know, you're going to get a better budget than if you just say, oh, it's probably about this amount. So just something to keep in mind. Okay, indirect costs. So I know these are a love-hate relationship. Admin loves them and other, you know, it kind of can kill your budget sometimes. So, but just so we can know what they are and why they're there. So what they are, they really are the primary financial benefit to the university. And it does help provide budget support to cover overhead and administrative oversight expenses. So, you know, if you're doing a grant, obviously, maybe like I'm helping you on the budget, maybe I'm doing your invoicing for you or providing accounting reports, Steve's giving you advice, and you're using your office at work or your laptop, you're using electricity and lights, all those things that like you're not really paying out of pocket for are costs, you know, that the university does incur in relation to the grants. So there's like kind of a way to kind of recoup those indirectly, you know. So if you're applying for a federal grant, there is a federally negotiated rate, and currently the university's is 51.4%, and that's on a basis of salaries and wages. So if you recall all those little line items on the budget, it's that top line of salaries and wages. It'd be 51.4% of whatever that amount is. That does not include benefits. It's just that one line item. So the rate, it is something that we do like a cost study on every 4 years. We have to prepare a study and submit it to our cognizant agency, and they actually like approve it or come back and they negotiate the rate with us. And then they give us a letter, which we do have posted on our website, because often like you know, somebody will ask for it, either the grantor or if you're working with another institution, they'll want to see it as well. But that is a properly, you know, researched rate, and that's accepted by the federal government. Now, if you're working on a private or a foundation grant, it could be different. You know, I don't know, they'll either maybe not allow it. They may say, oh, it's either the lesser of that calculation or 8%, or they may just say, oh, only 10% allowed, or only, so there's going to be different rules. So that's just something that may vary by grant. So we need to make sure we're reading that as we do the budget to see what they allow. But that's and then sometimes I would say that the costs, it may just be like a smaller grant and it may just really be eating up your budget, and it's just not worth it to take away a couple $1,000s because your grant's not that big. So in those cases, we can waive the indirect cost. The university can forgo them, but that would be just upon the approval of your dean. So again, you'd want to reach out to your dean and just, they're probably going to be super excited about your project, and the benefits of your project may outweigh the cost of the foregoing the indirects. And so in that case, they may approve it and then we're fine. But it's just something, if we're allowed to take them and we choose not to, then we probably need to just get that approval from your dean.
I had a question on that, Katie. Sorry. Is
No.
it just the dean's approval, or is it just is it from administration too, like Kevin?
I think it usually is off of the dean. However, it would be presented on our grant routing form. So in essence, they would be signing off as well. I
Okay.
think maybe we haven't ever foregone it on a large enough grant to warrant asking higher level. I'd say if it's a smaller grant, I think probably fine for the dean. If we were doing a huge federal grant and giving up hundreds of thousands of dollars, I think that would warrant higher approval. So
Yeah,
but
and
normally on the
yeah.
bigger grants, we don't forego those
Right.
costs either. So I think it
Right,
would be,
and-
yeah.
And there are negotiations that can happen around that. So it's really good to start the process early if you're
Yeah.
going to try to do a waiver or something, so that it's not a surprise at the end.
Right.
All right.
Yeah.
All right.
Exactly. I
Sorry.
think starting early and avoiding surprises are both excellent takeaways. All right. Okay, so now we come to where we put all of this stuff together on a form, a budget form. Now, keep in mind, each grantor will have maybe their own budget form. They may just have they tend to very oversimplify it. So they may have one little box, which is like 5 lines, and you just type the totals for each category in. But this is a template that I use that is also available on our sponsored programs website. So you can grab it off of there. But I just like it because it gives you can basically like list out everything detailed. You can put your little notes, like for travel, you could say, okay, I'm estimating 3 nights times 2 people times 500 airfare plus this hotel. Like it really just like helps you know how you came up with those numbers rather than just having these big round numbers at the end. So you really can track your, thought process. And especially as we're developing it and we need to switch some stuff around, it really does give us the detail to do that. It's set up for a 3-year grant. I can make it any amount of years you want. If you're only doing a 1 year, I can make it 1 year. So it's not like information overload. We do have a column for cost share, which I'll go into on the next slide. But that kind of helps you see that out. You can list like employee names, positions, that this percent here would be your like percent effort, like we talked about on the course releases or summer salary percents. We can list the benefit rates on here. At the bottom, it has our indirect costs and then, total project costs. So that, and then we can modify, like I said, the categories, we want to match whatever categories the grantor wants to see. So we can easily just change those to be whatever, but this is just a very standard. Now, oftentimes this form itself won't be submitted. Maybe if we're a subrecipient, we may provide this to our prime recipient, but usually this won't be the thing that goes to the grantor. So really it's just an internal working, worksheet. And in that case, we may or may not choose to change them, but in the end, we may just be taking like 5 or 10 numbers off the end and plopping them into their format. So just depends on the grant, but I mean, it's clean enough. We could, if we wanted to use it. All right, so going a little more into cost share. So certain grants may require the university to do what they call a cost share or a matching requirement. And that's basically, they want to see that the university is also invested in the project. So they're going to fork out how much ever money, but they want to see like, okay, what's it mean to you? Are you guys going to also be willing to contribute? So it can be either a cash or other in-kind contribution that, you'll be contributing. So there may be like a 10% cost share requirement. So if you're applying for a $100,000 grant, they want to see that the university is contributing at least 10,000. So whether that be just we give 10,000, maybe the dean's nice and says, oh, you can have a course release, for free. They have it in their budget to pay for an adjunct. So they're like, okay, I'll give you a course release. Then we can go through our process, calculate the value of a course release and say that that's a cost share. Sometimes maybe you'll find a private donor that wants to give you 10,000 to add to it, or maybe you'll find, you know, someone you're working with that either wants to donate services or supplies or materials. I think Steve and I were working on one the other day. I felt like we were starting to get a little creative in how we could get cost shares, but you know, there's sometimes things we're already paying for that are going to help the grant. Sometimes foregone when indirect costs can be considered as a cost share. So there's lots of ways you can get that. If it's required, obviously you have to show it. If it's not required, sometimes it's still of benefit to show it. So sometimes you know that there's some amount of something that the university is contributing, and you might want to just put it on there because it may strengthen your application. So that's a cost share. All right, so once we've got all the numbers kind of in order on our template spreadsheet, we then want to go to our sample or our budget justification. Sometimes it's called a budget narrative. And this is where we kind of take all that data and details that we use to calculate our budget on our spreadsheet, and we put it into like everyday language and paragraphs, you know, and we kind of write it out in words. So you really, I have a template on the sponsored program site where you can use this to start, but basically you just kind of go through each category and you're just going to give a description, kind of the who, what, where, when, why kind of thing. So, you know, salaries and wages. This person is the project director. You kind of want to say what they're responsible for. How do these costs relate to your project objectives? Like, why should this cost be included in the grant? Like, what benefit does it have on the project? So you want to keep all that in mind. So you'll just kind of go through and say, you know, what % effort for salaries. For fringe benefits, you can state the average rates by class of employee and just say, you know, whatever ones are in your grant. You don't have to list the ones that aren't there, but, you know, just say this is our institution standard rate. This is how it's calculated. If you're contributing any, we might want to say that there, or otherwise say this is how much we're requesting from the grantor. Consultant fees, you know, that's where you can do your little detailed calculation and say, okay, they're going to work this many hours and this is their average rate. And then, you know, same for your travel, like list out kind of how did you come up with your airfare? Just say me and the co-PI are going to travel to this city for these conferences, or, you know, as specific as you know, and then just say, you know, this is our estimate of X dollars and it came about from, you know, this is the airfare, this many nights of hotels, this many meals and incidentals, and just kind of break it out for them so that this is really your like chance to support your numbers and let them know, hey, I did my research and this is like a real budget that really will, you know, cover the cost needed to do this project. So you can, I mean, I'm not asking, it's really going to be between a page and 2 pages. It's not like, you don't need like essays about it, because obviously your project is already described in other places, but really just, you know, specifically describing each item on here. And then like what I'll do at the end is I go through and I make sure like all these totals, like I'll go in like foot any numbers that are in the text and make sure they foot back to your totals and that your totals match back to your budget summary. So that stuff I'll help you with, but just kind of know that it all kind of goes together.
Hey, Katie. I see a hand up from Michael.
Okay.
I don't know how long. Do you have a question, Michael?
Sorry, Michael. I don't, do I see it? Okay, I guess
It's okay. It's old. We can come back to it.
Okay, I apologize. I'm not accustomed to looking for hands up, so.
No worries. Don't worry about it.
All right, we're almost done here and then we'll have plenty of time to talk about questions. Okay, so once you have your budget and your narrative, then we are on to the part where we need to get approval. So we have a proposal routing form, which again is on our sponsored programs website. And basically you're just going to list the basic information of the grant, you know, your name, department, what grant you're applying for, the type of grant. And then this box in the middle is really what we talked about a lot here. You have your course release, the cost sharing, and the indirect. So you're stating whether or not you're asking for a course release, is there cost sharing, maybe voluntary or mandatory, or if you're going to be having indirects on here. It gives you the grant period and then also the total budget in a little summary. The second page just goes into some compliance questions that it asks, and then at the end it has the approver or the approvals. So the first person to sign will be you as the principal investigator, and then the sponsored programs, I usually sign that one. Basically, that's just me saying that I've reviewed the budget and that it appears reasonable and, you've covered what you need to, and those costs should support your project. Then you have your dean or the provost signing. That's where they really are, and I guess on here it does say Steve, the dean and the senior VP. That's really where they're officially giving their approval on all those elements we talked about. Like, are they approving a course release? Are they supporting the cost sharing that we've come up with? Are they allowing or disallowing indirects? So that's really where they're documenting that approval. I don't want this form to be the first time they've seen those things though. So really, I think you should have had a conversation with them before you get to this point to make sure they're aware, like they should already be familiar with this project by the time this form comes through. In an ideal world, this would be routed about 2 weeks before you submit your grant. It should be also submitted to us before you submit your grant. Obviously things happen, and I think we're pretty flexible, but we do appreciate that, being ahead of time and not kind of last minute. So, and then Steve set up this in Adobe Sign. So it's amazing. I think we've gotten some in back then less than an hour, haven't we? So it used to sometimes take a while because I had to carry it around to 4 offices, but now, it's pretty quick. So that does help a little bit, which is why we can give a little more grace on the timing. But yeah, so this is really, it's just an internal documentation that, the university's not committing to something that, they wouldn't want to commit to, and that everyone's aware, and that there's not just random things happening that we're not on board with. So. Okay, and that's the end of my formal presentation. This is the link to that site that I referenced like 10 times. So if you want to check it out, or I can also share it if you guys want me to share it real quick, either way, or else we can move into questions that you may have.
One thing I was going to add about the routing form is that most grants of significant size, there would need to be a letter from probably the dean, often stating their support for the project. And in that letter, they would also commit to doing like a course release or anything that the university is contributing. So that would be, you would want to have that letter in their hands, probably before the routing form goes through, so that they know what they're committing to before they see the routing form. And a lot of times when we route the form, I'll put a message in for things to look for that they're committing to, so that they know what's happening. So thanks, Katie.
Yeah. Do we have any questions? Michael, maybe we can hit your question now.
Yeah, thank you. My question was about indirect costs. So let's just say, just to use round numbers to make it easy, that I end up having a budget that's, $50,000 from personnel and $50,000 for supplies.
Mm-hmm.
The indirect cost, at least what I'm gathering from this, that's just calculated based upon salaries and not about from supplies. Is that correct?
Correct. So, well, it depends on what kind of grant you're doing. So if you were doing a federal grant, it would be taking 51.4% of your $50,000 of salaries and wages. And that would be the rate it would, or the indirect cost amount it would give you. Now, if you were doing a private foundation grant and it limited you to like 8% of the total, it would take your total 100,000 and only give you 8% of that total. So it does, I think each grant could be different depending on what they allow. Does that make sense?
Yeah, perfect. Thank you very much.
Yes, of course.
I have a question. Oh, go ahead, Michael. Were you not done?
I was just going to add to that the federal grants too will, like the one we had recently was a Department of Education training grant, which had an 8% overhead. But it basically was stated that you used either 8% of the total, or total basis,
Yeah.
or the negotiated rate, whichever was lower. And so it can vary on federal grants too. It depends on the program, and so that's one thing you got to look at when you're thinking about your budget.
Yeah, because the rates sound super different, like 51 versus 8, but it really is based on what basis you're applying it to. So, yeah, salary, the higher rate is based on a lower base because it's just salaries and wages, whereas, you know, the other one maybe all the direct expenses. So like in your example, Michael, that would add another 50,000 that would be applicable to the indirect costs. So. All right, Denise.
So I have two questions. You were
Okay.
talking about consultant fees and the ways to, I guess it is to keep those as consultants rather than as something we need to pay for differently, like making sure they don't have to fly to campus or things like that, I think.
Right.
So consultants that are in California, you said keep consultants should be outside of California or
Okay.
don't have to be in California?
So your question's about the out of state kind of factor?
Yeah.
Okay, so if they're working from out of state, but it's like all virtually and you're just corresponding with them and stuff like that, then you don't have any tax issues. We just pay them their rate. If they live out of state and they come into the state physically, then accounts payable, like let's just say you're paying them $5,000. Accounts payable is going to have to take that and it's 7%, I believe, for out of state. So they're going to have to withhold 7%. So you just need to factor that into your budget. And sometimes we'll do what we call a gross up. So if they really need to get the 5,000 because that's what you promised them, then you got to kind of do the math backwards to get to how much 7% of it is the net is 5,000, if that makes sense. We'll calculate that for you, but you just want to make sure that they're getting what they were promised, but then that makes your budget be higher. So then really it costs you a little bit more. But in today's world, if you're just doing like Zoom meetings with them and they're not coming here, then we don't have to pay that. And even if they work a lot, let's say they work primarily virtually, but then they come for one meeting, we can, there's a way where they only make us like allocate how much did they earn when they actually came here, and then we only have to tax that part. So all the parts they did virtually, we don't have to tax that.
Okay, that's good. Yeah, that's good information. What I was asking about is like, what about somebody who say is at like UCLA? So they're already in California.
Oh, then if they're a consultant and, we're not treating them as an employee, then you'll just pay them their rate, no taxes involved at all. So
Okay.
those are the easiest, they're just straight, okay, you're making X per hour times X hours, bam, that's how much we pay you. And we don't have to worry about anything after that.
Yeah, where they live doesn't determine whether they can be a consultant or not. It just has to do with tax implications.
Yeah,
and,
we just want to make
withholding.
sure we're budgeting it properly because obviously 7% would make your budget a little more. So,
Okay. I have another question on a separate topic. So you were talking about summer stipends. And I know you gave an example regarding the arts and sciences. The School of Business is also on a 9-month contract, but our months off are sometimes variable throughout the year. I don't know, in your experience, is there any, have you faced any like difficulties or challenges with that, with grantors? Because, people are applying for grants that run like January, February or something like that?
no, I think really the essence of the calculation will be the same because, if your contract's 9 months, you still have 3 months a year where
Right.
you're not under contract. And so that time is eligible to be paid. And unless Steve knows otherwise, I don't think they get into like when the work's being, it's more of the concept of like, okay, because I don't even know if summer salaries really people work on during the summer or if they just kind of work on it when they work on it and then over the summer the grant pays them. So I think it's a technicality kind of. I think as far as the grant's concerned, they just want to make sure overall you're not getting paid like more than the 100%. So I think it's just if you have extra time, then we can attribute that to that time. Now whether you're working it then or you're getting it paid then or now, like I don't think they would go into like what month you're off. So I haven't heard that detail, so that should not be an issue.
Yeah, it's just off contract versus on contract time. So
Yeah,
Thank you.
you're welcome. All right, any other questions? I know budgeting's like super exciting, so
Well, it's something you gotta, when
you gotta do.
you gotta jump in when you're doing your proposal, then you have to work it out. And working on your budget earlier in the process is good. Sometimes people wait to the end, where really doing your budget early is important because it helps you define your project scope and what you can really accomplish, because you're putting numbers and everything. So it's a good to get this started as soon as you can.
Yeah, and oftentimes like I have to get the salary data from payroll. So sometimes I have to coordinate with other areas, or maybe there's different unique situations that we have to get approval on. So it is good to make sure that we're giving ourselves time to reach out to those other campus constituents that we need to talk to get those answers, and not like rushing them into like an hour's response time or something. We want to be respectful of those other people we need to work with to get the data we need. So yeah, I appreciate ahead of time, and Steve does as well, and as much time as we can get. And then that way, we can route, like I said, the routing form, we like it 2 weeks early. Like as long as we have a like pretty solid budget, even if you might want to tweak a few things at the last minute, we can still route it with your pretty much done budget. And get it kind of going. And you may still be wrapping up some odds and ends on other items, but we can still get the routing form kind of circulated and approved, as long as there's no huge changes that will happen. But yeah.
Well,
and go ahead.
All I was going to say was, I've done a couple of budgets with you two that were, we worked all these details out, but listening to your presentation has been helpful to learn little details that weren't part of those particular budgets.
Yeah, good. Yeah, I was going to say, you do have the tools now to kind of do your own budget. But like I said, if this is not your forte or Excel scares you, I'm still happy to help. If usually if I kind of do it for you, I just ask that we kind of have a meeting and just kind of chat through the items so I know what to put and I can ask all my questions. And then I usually will go and kind of pop it in, and then we can talk again and see how it came out. And then also happy to help with that budget narrative. I typically will kind of take the data from our budget spreadsheet and I can put it in for you. And I usually will kind of, what I know based on our conversations, can kind of fill in the details. And then I usually will send it back to you with some highlights of some areas that I don't know that like, what is this person doing on the ground? What's this person doing? And then together we can kind of get it all together pretty quickly. So, but yeah, so welcome to start on your own, but also you're welcome just to say, hey, I want to do this. Can we do it together? And then we'll just, schedule a meeting and do it together. So however you prefer to operate is fine with us. We just wanted to give you some of our secrets on how we do these. All right.
Okay,
Well, Steve, are you going to be sharing the recording and the PowerPoint slides, or shall I do that?
Yeah.
Okay.
No, I'll do it within the next week. Last time I said I'd have it over the weekend, but this time I'll be more realistic. I'll get it up there as soon as I do. Yeah, the big thing is just set up a meeting with us if you have a proposal that you're thinking of doing as soon as you got the time to do it, because it's good to start going back and forth with us, having meetings and work out the details, and that process seems to work pretty well. Anything else you have to say, Katie?
I think that's about it.
Okay, well, it's really great that you guys made it today, and get in contact with us if you want to start working on a project proposal.
All right. Yeah. Thank you, guys. We
Okay.
look forward to working with you soon.
All right.
Thank you.
Well, take care.
All right.
Thank you.
Thanks.
All right. Thanks, Katie.
You're welcome. Thank you.